MF Corner right here on Markets at Lunch. Are they good for investors? Could they add value to your mutual fund portfolio? Let's find out from our mutual fund expert, Dhirendra Kumar, CEO of Value Research. Afternoon, Dhirendra. Thanks for joining us with your thoughts as always. FMCG funds have done well in the short as well as long term. What fuels their performance?
Understandably, the shaky market we have seen over the past 5 years, they have been able to withstand or, tide over this phase much better. And that is why even the long-term numbers, as the market debacle is now a 5-year-old story. So since 2008, we witnessed that, the long-term numbers also stacking up for FMCG funds. But not to say that, normal funds don't invest in FMCG. That is the weightage for the FMCG companies has gone up substantially even in those funds, even in normal generic equity fund. And if we are in for turbulent times, they just might continue to do well. But at the same time, there are concerns being raised that FMCG might be very expensive, and if markets turn around and if markets becomes a growth-led market of the kind we have witnessed before, not of that scale, then FMCG certainly will be an underperformer. It is undesirable for investors to guide to be guided by recent performance. It's very difficult. It's very difficult to resist that. Investors are getting into a belief, and that is a time when one should actually maintain one's balance.
Dhirendra, also Magnum FMCG has always outperformed ICICI True FMCG, but why does that trend sort of change for the one period, and what would be the pros and cons of investing into FMCG funds?
One is that nominal difference in performance of these FMCG funds is not very meaningful. The other is that of course we have a reasonable universe to choose from. The portfolio can be spread over a large number of stocks, but I still find that if you look at the FMCG index, the composition of that, the way it is top heavy, and also looking at the industry dynamics, top 5 players, at least in the listed universe, I think 5 companies will account for 80% of the capitalization, and the remaining 20% will be split over a large number of small companies. So I would say it's very normal for many of these funds to emphasize or de-emphasize some of specific company, and there could be a great performance variance. Should one invest in these? I don't think so. If you are investing in normal equity fund, you are fine. Just in case you want to emphasize a little bit, at most it should be it should be a supplementary investment. It should not be something which you should get carried away with and be investing substantially.
Okay, stay away from FMCG funds. That's Dhirendra's call on FMCG funds. Let's also take in some viewer queries. The first query is from Rajesh Tiwari in New Delhi. He comes under the 10% tax bracket and wants to know if you should go for indexation benefit. Dhirendra, what's your advice?
Your tax bracket doesn't matter. You should be guided by primarily the benefit which you will derive when you invest in fixed income funds or any other capital asset. You have at least fixed income fund. You have the choice of either paying 10% flat on your capital gains tax or 20% with indexation. So look at the benefit you will derive. If it's a long-term capital asset and by indexation, even after paying 20% post-indexation, your tax liability will be lower, then choose that. So you should be guided by and your tax bracket doesn't matter, you should be guided by the benefit you will derive.
Our second query today is from Nilesh. He writes in from Mumbai itself and says that he's been investing in Canada Robeco Equity Diversified Fund via the SIP route for 6 months now, and he wants to know if it is a good idea to now invest in Canada Robeco Equity Tax Saver Fund for ELSS scheme.
Canada Robeco Equity Tax Saver Fund is a good fund, but there is a great commonality between a good part of the portfolio is common, managed by in the same fund company, managed by the same fund manager. So I would urge that simply for sake of diversity, there are other superior or good tax saving funds to choose from. If I have to recommend some, I would say ICICI Prudential Tax Plan or Franklin Tax Shield or Reliance Tax Plan.